Welcome back to Strictly Money. If you own a home or are looking to buy a home, then there's a very good chance you're keeping a very close eye on mortgage rates. The 5-year fixed recently faced its biggest rise in more than 20 years. And judging by the recent Bank of Canada comments stating that higher inflation is here for longer than any of us want, it's a safe bet that more rate hikes are on the way. David Larocque is president of Integrated Mortgage Planners, and he joins me now to discuss rates and housing affordability. Hi, David. Great to have you on.
Hi, Sejal.
So we're not seeing any signs that inflation is abating, and having seen the recent comments, I guess, from Bank of Canada, anything surprise you there?
No, I think the Bank of Canada had to acknowledge the obvious, which is that inflation was not proving to be transitory. In their defense, they didn't anticipate the war in Ukraine, and there are a lot of factors that have conspired to make their original calls incorrect, as was the case for many people. I think it was surprising that the bank was adamant that more rate hikes were coming, and that they were so strong in that warning, because we've got record levels of debt outstanding, and it's not clear what the impact of each rate hike will be, but it's certainly likely that those impacts will be magnified. And the bank has just gotten done telling us that it's not going to give us forward guidance anymore. And it sure sounded a lot like forward guidance in the language that they used, but it wasn't the kind of forward guidance we're used to hearing.
Mm-hmm. David, they really are. It feels like they are in a tough position, right? Because if they raise rates too fast, we risk the fact of we risk an economic slowdown, and nobody really wants that. And the fact is, we've been addicted to cheap debt for a very long time.
That's right. The Bank of Canada, the central banks have no good options left. The challenge they've got is, if they raise rates, that will slow demand and could crush demand. But in reality, the main causes of inflationary pressures are on the supply side. So they're trying to put a round peg into a square hole to staunch the leak, and it is a blunt tool for the job. The challenge, though, is inflation expectations are becoming what the bank calls unanchored, meaning that people are beginning to plan for higher inflation for a longer period of time. And if you're the Bank of Canada, nothing else comes close to mattering as much as those unanchored inflation expectations. So they're in a corner right now, and at this point, it's basically come heck or high water, they've got to bring inflation expectations back under control, and they've got to do what they can to bring inflation back under control, even though, again, monetary policy is not well suited to help with supply challenges. So they're doing the best they can, but their rate hikes are not the best tool for the job.
Yeah, those expectations can lead to self-fulfilling prophecies, as we know. So, David, what do you think this means for the? I want to talk about demand and supply for housing, but what do you think this means for the demand side for housing? Are you expecting a slowdown?
Absolutely. I'm already seeing it. If you're a buyer right now and you see that fixed rates have already increased, but more sharply than they have in the past 2 decades, the Bank of Canada has raised by 0.75%, and they've said we're not done by a long shot. Certainly buyers are saying, you know what, I don't know what the impact is going to be on the housing market, but I'm not nearly in the hurry that I was. And granted, if you're a buyer with a pre-approval rate that's expiring in June, you might still have a 3% fixed rate and be looking at a 4% fixed rate if that pre-approval expires. So over the very short term, there will be some buyers looking to get into the market while that pre-approval with the really low rate they have is still active.
Yeah.
But I think a lot of buyers are being more cautious now, absolutely. A lot of offer nights aren't getting any offers. I'm actually seeing purchase and sale agreements with financing conditions now, which for a Toronto mortgage broker, I haven't seen in the better part of a decade.
Wow.
They used to be as rare as hen's teeth. So definitely, I think the market is changing. I don't think it's clear that we're going from a seller's market to a buyer's market, but I think we're definitely in transition. And at this point, the market is changing for sure.
Okay. We only have 20 seconds left. Do you still think, I know the last time you came on, you thought variable was still the way to go versus fixed? Still feel that way?
I think if the Bank of Canada increases too much, we'll get a recession, and I think rates will fall on the other side of the recession. So over the next 5 years, I think variable rates are still a good bet to save money over fixed rates, but there's a lot more uncertainty in that call this time than the last time we spoke.
Okay, we'll take a quick break. We'll be right back. Welcome back. David, I want to get your thoughts on the proposals released in the 2022 federal budget, specifically to address housing affordability. And let's start with this $4 billion accelerator fund to address supply. Thoughts?
A lot of smoke. The federal government certainly touted their budget as being very much focused on dealing with housing affordability. But when I wrote a blog about it, and when I got into the brass tacks, I was left wholly unimpressed. $4 billion is a good sounding number, but the problem that they've got is the municipalities and the provinces control a lot of the approval processes that are slowing down new construction, and they've earmarked this money, but how are they going to spend it? There weren't a lot of details on that. To me, it was just all puffery. There wasn't anything behind it. If they had said, we're going to create an infrastructure fund and there's $4 billion in it, and the municipalities that get behind the program and use the money first will get the money, and those that are slow won't. That kind of thing, I think, would have created a lot more traction in the market. But at this point, what they're saying is, well, we're gonna commit $4 billion to help the municipalities and encourage them to speed up their approval processes, but all of the politics at the municipal level favors slowing down approval processes. If you're a municipal politician, you want to get elected, try explaining to your residents why approving a whole bunch of new dense housing developments in their low density single family neighborhoods is good for them, and then ask them to vote for you again. It's a very complicated situation, and there's a reason the problem has existed for a long time. And I don't think the $4 billion pledge, I don't think that money will ever be spent in totality. And ultimately, there wasn't a lot of detail about how they were going to use the money. And really, the devil is always in the detail with these things.
Absolutely, no, and a lot of good points you make. What about this proposal to end blind bidding? Because that's getting a lot of attention. And I should remind viewers, this is a practice where buyers bid for a home without knowing the size of the competing offers. How do you feel about it?
I think we should absolutely do it. It's crazy to me that people are expected to make the biggest purchase of their life without knowing what price it will take to buy the asset. And in some cases, overpaying by huge amounts, basically because they were ignorant of the price they needed to pay. I don't think it's defensible. The arguments I've heard are that, well, there's no blind bidding in Australia and house prices there are still high, and affordability there is still a challenge. Well, fair enough. But at the end of the day, ask anyone on the street if it's fair that they should be asked to bid on something so expensive as a house without knowing the price it would take to buy the house. And I just don't think there's a compelling argument against it. I think it's long overdue. And quite frankly, the only thing stopping it at this point is politics. And ultimately, I don't think history will be kind to the people who have opposed this change.
Yeah. Speaking of politics, I mean, Ontario seems to be sitting on the sidelines on this one, right? And yet there's this argument, well, blind bidding is good for sellers and sellers should have that option.
Sure. There are lots of things that are good for one side in a transaction that are really bad for people on the other side of the transaction. And to me, the way you determine whether or not something should change is you look at the fundamental fairness of it. And I think any person can look at the situation with blind bidding and say, well, should sellers have the right to create circumstances where buyers are at a disadvantage and at great risk of overpaying? And if the answer to that question is no, and I think it would be for most people, then the thing we should do next seems pretty obvious.
Okay. David, we have about 45 seconds left. What are you seeing in terms of inventory and the turnover? And the reason I asked for that is if supply is still tight, will higher rates actually have an impact on home prices?
Right now, supply is tight. There's no question. We still have, I think in the GT area, in the Toronto area right now, we have about a month's inventory, which is still considered quite tight. We need to get up to about 3 months, I think, before the market would seem more balanced. But this will be interesting. I saw a stat recently, about 30% of homeowners own more than one property. There's a lot of people who, when they moved up, held on to their previously owned property and are renting it out. And when rates go up, there's a lot of pressure on those homeowners, the homeowners of multiple properties, to unload one of them. And over the next 6 to 12 months, I think we might start to see that happen. And if we do, then that'll increase supply.
Okay. David, thanks for coming on today. Really appreciate it.
Thanks, Sejal.
Well, thanks for watching. We'll see you next time.